You are watching Market Watch, the brief overview of the key events from the world of finance. On Tuesday, oil prices were trading near 7-week lows due to a weakening demand forecast, which affected commodities. While bond, currency and equity markets are trading cautiously ahead of central bank meetings in the US and Japan and a series of major corporate reports. WTI futures extended their decline and seem ready to overcome support in the $75.50 per barrel area. Significant resistance to the fall in quotations can be found in the area of $73. The S&P 500 index stabilized after a 2-week decline, and futures fell 0.4% at the beginning of the Asian session, as attention is focused on two-day meetings in Washington and Tokyo, which will end on Wednesday with interest rate decisions. Markets are practically not counting on a rate cut in the United States this week, but they have fully taken into account a 25 basis point rate cut by September. In Japan, a wider range of outcomes is on the agenda, and markets are estimating a 10 basis point 60% chance of a rate hike, expecting the Bank of Japan to announce plans to phase out its massive bond purchase program. Meanwhile, in the foreign exchange market, the dollar and yen remained in narrow ranges and took a breather after recent breakouts. The euro was worth $1.0850, but formed an impulse exit from the range, although it met resistance to further decline. In turn, the Australian dollar, which is declining due to falling commodity prices, was under slight pressure. The Aussie, which was worth almost 68 cents less than 3 weeks ago, was trading at $0.6550. The yen, which had strengthened sharply from a 38-year low of 161.96 per dollar reached in early July, was at 154 per dollar. And now to the crypto markets. The local growth of Bitcoin, one of the triggers of which were probably the statements heard by the community at the Bitcoin 2024 conference in Nashville, is currently complete. The price of the asset, having overcome the local maximum in the area of $68,400 and faced resistance caused by sales in the area of historical highs, adjusted downwards. In the event of a resumption of growth, resistance in the area of price peaks remains relevant. With a decline, the nearest target will be the $62,000 to $63,000 zone. The probability of further decline will need to be assessed based on price dynamics near these levels. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.